Is President Trump about to crash global markets? What happened on Friday is something you must be aware of. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. What we're seeing right now in this post, as of June the 1st, President Trump wants to introduce a 50% tariff on the EU. Now, this is pretty problematic because we've seen what happened when President Trump went to town on China. It spiked the VIX like crazy. This is causing a lot of grief inside financial markets. The thing to understand, although earnings were looking pretty good in terms of forward future earnings in this quarter, the tariff wars have created a lot of drama. And it's affecting global trade. If we have a look at container ships leaving China for the US, they've decreased substantially. Are we about to see the same thing happen in Europe? We saw recently what happened when President Trump went after China. Now, President Trump is going after Europe. Of course, so many fantastic things come out of Europe. It's going to put a dent into global trade. In 2024, the US imported $617 billion worth of products from European suppliers. And that's not surprising because the EU is comprised of 27 member states, including Germany, France, Italy, Spain, Poland, Romania, Netherlands, and Belgium. Just to put the EU into perspective, it's literally the world's leading exporter, generating $6.795 trillion, or nearly 30% of total export sales for all countries. What does that actually mean if President Trump throws on a 50% tariff to EU goods? Well, look at this. Medications are going to go up in price. Typically, when you think of European cars, BMW, Lamborghini, Ferrari, oh my goodness, all the great cars, all those Lambo dreams, ouch, they're going to get more expensive. And if you're after your private jet, that's probably going to go up too. No matter what you trade or invest in, if you're inside the stock market, Forex, commodities, or crypto, it's really important to understand the role of the VIX in all of this risk-on or risk-off behavior. What we saw recently, from about the 9th onwards, the VIX was basing. Now, what does basing mean? It means typically that the markets are going to go in either one of two directions, up or down. Now, when the VIX comes up, that is not good for markets. It's not good for risk-on asset classes. If you were trading and investing in Tesla, what you would have seen as the tariffs hit the global markets, Tesla's value plummeted from around that 290 down to 222. I'm just going to invert this price scale so that gives you a better understanding of how the VIX and specific stocks intercorrelate with each other. This is a really important skill to get. When the VIX spiked, Tesla bottomed out. And then when the VIX came down, Tesla absolutely rallied. I'm going to uninvert the scales. And if you bought Tesla around that $222 mark, you're sitting pretty. It's nearly $340. We know the prices are always moving in a wave. If we get a spike up in the VIX, we get spike downs in risk-on asset classes. Tesla is a pretty good risk-on or risk-off asset class, Bitcoin as well. Now we're seeing through Tesla weakness starting to develop around that basing period. Remember, the EU tariffs only came out on the last trading day, basically Friday US time. But if you were doing the cheat sheet, you were already aware that this weakening was going on, and you could explain price action in a way that other people wouldn't even dream of looking at. This is the power of the CTKS method, and if you're liking the content so far, please smash that like button. Let's see if we can get over 100 likes in this video. If you like it heaps, smash it twice. Let's have a look at Apple. We can see that Apple, just before the trade tariff trade war erupted globally was up around that 224. It came down to around the 172. But as the VIX dropped off, Apple absolutely rallied. Now, Apple is very, very geopolitically sensitive because Apple outsources its manufacturing into China, and we saw that all of those container ships are starting to decrease. Now, what have we seen since the basing event right back around the 9th? What we've seen is Apple come down and down and down. This is an uninverted chart. How can you tell what's a normal and what's an inverted chart? A normal chart, the little numbers like 0 start at the bottom and they become bigger and bigger as it goes up. Yeah, that's kind of normal. What about an inverted chart? What does that look like? Well, that's the exact opposite. The big numbers are on the bottom and the little numbers are on the top. And talk about directional correlation. Look at that inverse. Ay caramba, what are we seeing here? Well, if you're an investor or trader inside Apple and the VIX spikes, prepare for negative price momentum. But up to where? It really depends on how the market views the tariffs, and they're coming in within the next week. Now, President Trump may do his typical art of the deal thing and say, just kidding. Yeah, the EU got the idea and, okay, we won't do it. We'll reduce that. And that would push the VIX down. But if President Trump holds true to his guns, we expect an upward surge in the VIX. And you know that the EU is the major exporter globally. So we saw what happened when President Trump went after China. Now President Trump is going after the EU. Now, what does it mean for you? If you see lower prices, that's a good thing, because those lower prices is where investors realistically want to get in. For example, this is an inverted chart. So let's stop inverting it and uninvert it. But you can't unsee that directional correlation. That's called directional correlation. They overlay in magnitude and amplitude. Right, so what we're saying is if you could buy, for example, Apple down at 172, wow, fantastic. You would have done really, really well. You could have ridden it up. And depending on your trading skills, you could just take a portion of your position and just scale out, or scale back in and scale out. There's so many things that you can do. It is true that all investors become traders anytime they buy or sell, but unfortunately what typical investors do, when the price is plummeting down like this, they capitulate. They run away from the market just as the bottom is in. And if you've done this, don't worry about it. It's just normal behavior inside financial markets until you get wise to what the markets are actually doing. That does take time, but it's very, very profitable. It's all about controlling your emotional state. As the VIX is spiking up, when it starts to CU, and students understand what a CU is, you can get in and at a low risk. It's the ideal DCA strategy. Okay, let's have a look at Bitcoin. What was Bitcoin doing? And we'll just invert this scale so you can see that Bitcoin is following the directionality of the VIX. This is really important stuff. So when the VIX came down here, Bitcoin came down. When it flattened, it flattened. When it went up, it went up. When it went down, it went down. You get the idea. And what are we seeing down here? Yeah, it's following, absolutely. So what does that mean? If the VIX starts to spike up here, what are we looking at? Well, we've seen a degree of weakness enter Bitcoin as it reached and exceeded all-time highs. Now, all-time highs typically mean a bit of a retracement as people take profit. A lot of people FOMO in as something reaches an all-time high and then it retraces and then they say, oh, did I get it wrong? Nah, that's just pretty normal price behavior. But what we're dealing with here is the understanding that the EU is a major exporter. 50% tariffs. Wow, that is a lot. For example, if you want to go and buy that Ferrari, that Lamborghini, for say a cool $500,000, it's going to cost you $750,000. You will need a little bit more profit to make those Lambo dreams come true. Now, what we saw with Bitcoin, and let me just look at this from an inverted stance, we can see as the VIX topped out, Bitcoin bottomed out. Now, I'll uninvert it. So if you were buying Bitcoin at around 76,000, that would be pretty damn good. But you'd have to keep your eye on what the VIX was doing. And there were quite a few opportunities to get in if you were willing and wanted to. Literally, when the VIX spikes up, it's the ultimate DCA strategy. Brought to you by tariffs. Let's have a look at gold. When we look at gold, we're seeing some pretty interesting things. Gold just held with the VIX going up. So when the fear came into the market, gold was saying, I'm very geopolitically sensitive, I'm going to go up with the VIX. But then what happened? When everybody sells, guess what? They even sell gold. This is pretty interesting stuff because people tend to think that gold will just spike all the way up with the VIX. This is a pretty disastrous thing because when people say, I'm going to go all in on gold when the VIX is just spiking like a crazy thing, gold says, everybody's selling, they need to sell their gold as well. Until that clears out all the retail hands and then gold goes again. Please be aware of this factor. Let's have a look at what happens with the DXY. We see that as the VIX came down, the DXY came up. This is fairly normalized price action. Then the VIX came up, the DXY came down. But when the VIX started to spike like a crazy thing, what happened to the DXY? It fell and then it rallied. Now, is this an inverted chart or a normal chart? Where's the little number? 97 versus 105, that's the little number. That is just a normal price chart. So we're not inverting anything. So we can see that the DXY and the VIX tend to move in directional correlation. Not all the time, but tend to. Now, what are we seeing here? The DXY is coming down at the current time. Could this be a potential for the VIX to spike up like we've seen previously? The answer is potentially. Yes, it is on the cards. We're always going to get spikes in the VIX, no matter what we're looking at. This is just a natural part of price momentum inside markets. Okay, so you can see that the VIX is basing, starting to go up, and we're seeing weakness in the dollar index. Let's have another quick look at a Forex pair because all of this is intercorrelated and interconnected. This is the euro dollar. You can see the euro dollar matching very nicely except for this panic area, but that's kind of what happens. And we can see that the euro has been performing well. Look at this basing and it's starting to go up. Now, what does this mean to Bitcoin or if you were investing in Tesla or especially Apple? What it means is if the euro dollar continues to gain strength, we expect the DXY to lose strength, the VIX to be coming up, and of course, Apple, Tesla, Nvidia, Bitcoin, your alts, all to be coming down. So therefore, looking at a Forex pair can give you a signal on where your chart is going. Just superb stuff. It's like getting next week's lotto numbers. And if you want to get more cool tricks and tips like this, don't forget to smash that subscribe button gently. And if you would really like to excel, there's a free resource that you should absolutely grab. This is the cheat sheet to mastering price action. If you've been following the cheat sheet, you already knew all the fun and games the VIX was throwing in advance. And that is a pretty cool thing. There are also a lot of free videos on that particular page. This is ctksmethod.org. Please check it out. It's really, really valuable to you. Let's just do one more really quickly. We can see this price chart is Solana's price chart. And when we invert Solana across the VIX, what do we see? That's a pretty undeniable relationship. Now, what does this mean? It means that you must keep your eye on the VIX. It doesn't matter what market you're in. If you're in Forex, it also doesn't matter. You must look at the VIX. This is exactly how institutional and sophisticated investors and traders look at markets. This is not how regular people look at markets. And if you're liking the content, please consider becoming a member of our global family. We have the best community on YouTube. Also, the CTKS ambassadors are just awesome people. So what are we seeing here with Solana's price action? Now I'll uninvert this scale. If you were buying Solana around this 105 mark, you would do really well. Look at that. It's currently 174 and 01, and we know it was higher. But why has it come down? And you can see what we're making is a lower high. There's a potential, either a bull flag developing here or a change in trend. Something else that could really help you out. Inside the CTKS family, we know the price is always moving in a wave, and that's due to intercorrelation and interconnection. It's primarily due to structure as well. But because price is always moving up and down like a wild thing, we have three dimensions that we hold. We don't have a psychological stop loss. Now, what I mean by that is that you could say, the markets are going to just fall off a cliff. If you do that and the markets go up, you will not be prepared. That's what a lot of people do, so please don't do that. Just say the markets are normalized until proven otherwise. We're starting to get a stacking of probabilities that the VIX does want to party up, but that doesn't mean it will. It could be a couple of days before it does. Now, if that's the case, you want to be prepared for any upside price action in the charts that you're looking at. And just be aware that that downside action also exists. Now, how do you deal with this? Because this is pretty tricky stuff. If you're like most investors and traders, you go all in and more at one position. You cannot buy the dip because there's no money to do it. Inside the Coffee Club, there are a number of free videos. I suggest just check out the links in the description of this video. They're very helpful. But what we do is that we buy at levels of structure down. Now, why do we do that? Well, one thing is it minimizes risk. But a lot of people say, I want to maximize profit. Well, if you get stuck in something like this, you're going to maximize your loss and not your profit. And typically, people don't know what causes price to move downwards. Also remember that the stock market is a pretty lazy animal. It can take quite a deal of time for it to get into a particular flow. Therefore, going all in and more and one position and just saying up only is not realistically the most sensible thing to do, because price is always moving in a wave and you want to take advantage of those retracements. And if you want to get really good, look at intercorrelation and interconnection. They are worth a fortune to you. Thank you for being here and for sharing this time together. Please share this video out to your friends and family members. It will make a great deal of sense to them, and they've probably never ever seen anything like this. This kind of knowledge is hidden from most people. If you share this out, you'll be doing a great service to the people that you love and care about. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.